Ladies and gentlemen, good day and welcome to Aavas Financiers Limited Q1 FY25 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risk and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing the star, then 0 on your touch-tone phone. Please note that this conference may be recorded. I now hand the conference over to Mr. Rakesh Shinde, Head of Investor Relations at Aavas Financiers Limited. Thank you and over to you, sir.
Good evening, everyone. I extend a very warm welcome to all participants. Thank you for participating in the earnings call to discuss the performance of our company for Q1 FY25. The results and the presentation are available on the stock exchanges as well as on our company website, and I hope everyone had a chance to look at it. With me today, I have entire management team of Aavas, including Mr. Sachinder Bhinder, MD and CEO, Mr. Ghanshyam Rawat, President and CFO, Mr. Ashutosh Atre, President and CRO, Selvin Uthman, Chief Business Officer, Surendra Tihak, Chief Collection Officer, Ripu Daman, Chief Credit Officer, Gigi Oman, Chief Technology Officer, Anshul Bhargava, Chief People Officer, Rajaram Balasubramaniam, Chief of Strategy and Analytics. We will start this call with an opening remark by our MD, Sachinder Bhinder, CFO Ghanshyam Rawat, and CRO Ashutosh Atre, followed by Q&A session. With this introduction, I hand over the call to Sachinder. Over to you, Sachinder.
Thank you, Rakesh, and good evening, everyone. I welcome you all to our Q1 FY25 earnings call, and thank you for joining the call in the evening. Let me now take you through the key highlights of our performance in Q1 FY25. We are delighted to report a robust growth of 22% YOY in AUM, reaching 178 billion. Along with the strong growth, we have ensured best-in-class asset quality with 1+ DPD at 3.65%, an improvement of 3 bps YOY, and a GNP of 1.01%. Our net profit for Q1 FY25 stands at rupees 1.26 billion, registering a growth of 15% YOY. In terms of business updates, in Q1 FY25, we disbursed rupees 12.11 billion, delivering a growth of 13% YOY. At the end of Q1 FY25, our AUM stood at rupees 178.41 billion, up by 22%, which aligns with our target to grow our AUM by 20 to 25%. The robust 25% year-on-year growth in the sanction serves as a clear indicator of our robust trajectory, which instills confidence to deliver sustainable growth in the disbursals for the entire FY25. We have opened 4 new branches during Q1 FY25 in our existing states to deepen our reach. We have seen a strong uptake in the logins led by diversified omni-channel lead generation funnel, including digital, e-Mitra, RRO and Mitra, resulting in better disbursement and building a healthy business pipeline. In terms of technology update, I am happy to share that we have completed the milestone of adoption and stabilization of Salesforce with 1.9 lakh plus loan applications processed through Salesforce. Additionally, we have stabilized Oracle Fusion, our ERP application. A new lead management system built in Salesforce has successfully gone live with selected branches in pilot form. Our loan management system on Oracle FlexCube is at an advanced stage of testing and will go live in the coming quarter. Technology is playing a key role in transformation and turnaround time improvement. Our login to sanction turnaround time has improved to 8 days in Q1 FY25. In terms of financial performance for the quarter, our net profit grew by 15% YOY, led by growth both in interest income and non-interest income. Our consistent efforts to optimize costs have resulted in a remarkable improvement in OPEX to asset ratios by 52 bps, which is now at 3.27 in Q1 FY25, from the previous year's quarter at 3.79. Our asset quality continues to be pristine, with 1+ DPD at 3.65% as of June 24, down by 3 bps over Q1 FY24. Our GNPA stood at 1.01 in Q1 FY25, and credit costs remain at 20 bps. In terms of liability, we are one of the best well-diversified liability franchises. We have always been innovative in exploring new avenues of sourcing, and I am happy to share that we have started exploring co-lending. Our incremental borrowing cost increased by 30 bps YOY and 17 bps QOQ to 8.31, indicating the cost of borrowing peaking out in line with the benchmark rates. The FY25 Union Budget marks a transformative leap in addressing India's housing needs by significantly expanding the Pradhan Mantri Aavas Yojana to include 30 million additional houses, the Government of India's commitment to providing housing for all. We are committed to a strong growth, and our focus on innovation, technology, and cost optimization will continue to drive our success, and I'm confident with our dedicated team and strategic initiatives, we will achieve our goals and deliver value to our stakeholders. I would now hand over to our CFO, Ghanshyam Rawat, to discuss the financials in detail.
Thank you, Satyendra. Good evening, everyone, and a warm welcome to our earnings call. First, to update on the borrowing. In terms of borrowing, we continue to borrow judiciously and raising around 11.35 billion at 8.31% in Q1 2025. Total outstanding borrowing as of 30 June 2024 stood at 158 billion. Overall borrowing mix as of 30 June 2024 is 47.8% from term loan from the bank, 24% from assignment and securitizations, 19.6% from NHB refinancing, and 8.6% from debt capital market. During the quarter, overall cost of borrowing increased by 1 basis point quarter over quarter to 8.08%. Our incremental cost of borrowing for Q1 FY25 was 8.31%. Lender support continued to remain extremely strong. There is access of diversified and cost-effective long-term financing. We maintain a strong relationship with the development financial institutions. To meet long-term business growth, we have progressed on co-lending tie-up with the PSU Bank. As of 30 June 2024, we maintain sufficient liquidity in the form of cash and cash equivalent and unavailed cash credit limit of rupees 17.5 billion and documented unavailed sanction of 12.6 billion. In terms of spread, as of 30 June 2024, the average borrowing cost of 8.08% against the average portfolio yield of 13.08 resulted in a spread of 5%. We have been able to maintain our spread around 5% in line with our guidance despite competitive pricing pressures. Our margin, NIM as a percentage of total asset during Q1 FY25 stood at 7.31%. Our NIM in absolute terms has increased by 10% year on year Q1 FY25. In terms of cost, our OPEX to asset ratios improved 52 basis points to 3.27% in Q1 FY25 versus 3.79% in Q1 of FY24. We are committed to gradually bring down to OPEX ratio around 3%. Credit cost during the quarter stood at 20 basis points in Q1 FY25 versus 16 basis points in Q1 FY24 and Q4 FY24. In terms of other parameters, profit after tax during the quarter increased by 15% year on year to rupees 12.61 billion. ROE stood at 3.01% and ROE 13.14% in Q1 FY25. IGAAP to India's reconciliation has been explained in detail for profit after tax and net worth on slide number 30 and 32 of our presentation. We are very well capitalized with a net worth of 39.03 billion and CAR at 44.48%. Total number of live accounts stood at 223,600, translating into 16% year-on-year. Employee count was 5,904 as of 3 June 2024 versus 5,700 30 June 2023. Now I would like to hand over the line to our CRO, Ashutosh Atre, to discuss the assets quality.
Thank you, Ghanshyam. Good evening, everyone. I am pleased to share the key portfolio risk parameters with you. Asset quality and provisioning. Our asset quality, as mentioned by Satyendra, continues to show improvement. The one-day past due metric improved by 3 basis points to 3.65% in Q1 FY 2025 compared to 3.68 in Q1 FY 2024. As of 30th of June 2024, our gross stage 3 stood at 1.01% and net stage 3 at 0.72%. In terms of geography, 1 plus DPD and GNPA in our core vintage states remained well below 4% and 1.1% respectively, whereas other emerging states, 1 plus DPD and GNPA remained well below 3.5% and 0.9% respectively. Similarly, in terms of ticket size of more than 15 lakh, 1 plus DPD and GNPA remained well below 3.3% and 0.8%, whereas in case of ticket sizes less than rupees 15 lakh, 1 plus DPD and GNPA remained below 4% and 1.25% respectively. Our total ECL provisioning, including write-off for COVID-19 impact as well as Resolution Framework 2.0, stood at 907.5 million as of 30th of June 2024. Aavas is strongly positioned to continue delivering industry-leading asset quality. With this, I open the floor for Q&A. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Sripal Doshi from Equirus. Please go ahead.
Hi, sir. Good evening, and thank you for giving me the opportunity. So my first question was on business momentum and particularly on disbursements. So the run rate has come off materially from the 4Q levels. And within housing, the degrowth is even higher. While I understand that 1Q tends to be soft, but what is it that led to this lower disbursements during the quarter?
Thanks, Sripal. As you really appreciate and you highlighted, you always have a muted quarter one. But here I would like to highlight on against robust sanction growth of about 25%, we had sanction to disbursement around 78%, which led to the growth being muted on the lower side actually. But as really pointed out, on a 25% sanction growth, we expect the momentum to come back in the coming quarters.
So, sir, if we have to look at it from a different angle on a yearly basis, what sort of a disbursement that we are, targeting, and how do you see it shaping up over the quarters?
I think, as I said, that one parameter on which is that the sanction growth is there on the clients, and I said that we are at around 77% on this quarter. And in the coming quarters, we'll have the sanction to disbursement ratio really covering up to the normal levels of 85-87%. That's the normal range which will remain. So we are confident of bouncing back on the quarter number. So what instills confidence is one is the login growth and second is the sanction growth. These are the two parameters which really help us give that confidence of there. So unlike a normal one, we have a sanction growth which is already available with us actually, and that will translate in the coming quarters.
So are you saying that there was no, material momentum decline in terms of the number of logins during the quarter?
No, as you reflect, as I highlighted, there is a growth in logins and there is a growth in sanction, and both of them we've given the numbers out. So there's no momentum growth if I were to really pop across. There's a decrease in the sanction to disbursement ratio, which has resulted into the disbursement being on the little muted side.
Okay. So the second part was pertaining to the end use of the other mortgage category that we have classified this quarter. So what would be the end use there? And yeah.
So other mortgage, if you really look at it, it is the MSME side of the part, which is the micro MSME, where it is typically the unserved, underserved, which we really focus on as a specialized HFC, which is very unique to Aavas, which really helps in building the capital creation for the working capital customers on the micro MSME side. And you see the degrowth on the LAP and the top-up side, and really it's gone into the capital consumption on the MSME side, and that's around I think that's around 22%.
Okay, so the end use is for the micro MSME purpose.
So referring to the micro MSME, right, Shripal, if I have to get it.
No, I was talking about the other mortgages. So
these are typically the loan against property and the top-up loans, which are home loans, which you have the top-up loans, which get classified as the loan against property, and the loan against property, which is for the personal consumption. These are all backed by self-occupied residential properties.
Okay. So the last question was on pricing. So we had done rate hike couple of quarters back. So I think. So why has there not been any improvement on the yield side during the quarter? So that was the question, sir.
Yeah. So I think if you see the disbursement yield, there is an improvement on the disbursement yield on quarter and compared to the previous quarter. But on the overall yield side, I think you've seen not that kind of compression which was normally there in the earlier times. So and maintaining a consistent spread of about 5%.
Okay. Got it. I'll come in the queue if I have more questions. Thank you.
Yeah. Thanks, Shripal.
Thank you so much. The next question is from the line of Mr. Renish, ICICI Bank. Please go ahead.
Yeah. Hi, sir.
Good evening, Renish.
Yeah, good evening, sir. Sir, congrats on a good set of numbers during extremely challenging environment. Sir, just two questions from my side. One on the spread and the lending side again. So when we look at the incremental cost of borrowing at around 8.3 versus blended cost of 8.07, which essentially means that going ahead, the blended cost will converge towards the incremental cost. And when we look at the yield, it's been downtrending since last many quarters. So how confident we are about sort of maintaining this 5% spread for the full year? I mean, though, we know that we have increased our PLR by 40 basis points, I think in April. But that doesn't reflect in this quarter. Maybe it should reflect in consequent quarters. But what is your internal assessment?
So I'll have the two parts of the question. The second part, I'll have Ghanshyamji to respond. On the first part, we've been giving a guidance. Our endeavor is to maintain 5%. And as you will really appreciate that there has been a spike in the incremental cost of borrowing, and the same transmission has not been possible at the ground. So as a result of which, you do not see the incremental increase in the cost of borrowing being able to pass on to the existing set of disbursement customers. And on the yield side, on the placement, I'll have Ghanshyamji to really respond on the second part.
Thank you, sir. This quarter, when we borrow fund, NHB contribution is always remain low than what we borrow for full year basis. So this year, new limit will come once we complete this quarter. Then the contribution of NHB borrowing will increase in overall borrowing. So we are confident that now cost of borrowing is almost peaking out now at this level basically. And we borrowed a good amount of money as a T-bill link, repo link money. So whenever the rate cut come, it will have a positive impact on our overall cost of borrowing basically. And yield side, if you see last quarter to this quarter, we have almost 17-18 basis point higher yield on the new business we got in this quarter. So we are quite hopeful. We are going more granular, more smaller ticket going forward in our business strategy. So I hope that will also help to maintain our at overall yield level basically, or new disbursement will have further increase in yield basically. So our endeavor is that key to maintain this 5% spread going forward.